Hello everyone. DMart has released its September 2025 quarterly results, and once again, the retail giant has proved why it's considered one of India's most consistent performers. Sales have grown steadily, profits remain strong, and the company continues to expand without taking on heavy debt. Let's break down how this quarter looked for Avenue Supermarkets, the company behind DMart. This quarter, DMart reported revenue of about 16,676 crores, compared to 14,445 crores in the same quarter last year. That's a growth of around 15.5% year-on-year. Even compared to the previous quarter, where revenue stood at 16,360 crores, sales are up by around 2%. For the first half of this financial year, total revenue has reached 33,036 crores, compared to 28,514 crores in the same period last year. That's a solid 16% increase. Now, coming to profits. The company reported a profit before tax of 944.8 crores, compared to 903 crores last year. That's a 5% increase year-on-year, though slightly lower than the 1,057 crores it reported in the June quarter, mainly due to some one-time tax adjustments. After taxes of about 259 crores, DMart posted a net profit of 685 crores this quarter, compared to 659 crores a year ago. For the first half of fiscal year 2025, total net profit stands at 1,458 crores versus 1,433 crores last year, showing that DMart's profits are holding steady despite inflation and competitive pressures. If you look at margins, the company maintained an operating margin of around 7.3% and a net profit margin close to 4.6%. Margins are slightly lower than last quarter's 7.9%, but still healthy for a retail chain that continues to open new stores and expand across India. When we break down the costs, purchase of stock in trade stood at 14,919 crores, employee costs were 377 crores, depreciation was 253 crores, and the other expenses came in at 923 crores. These numbers show that even as operating costs are rising, DMart continues to keep its supply chain efficient and costs tightly managed. For the first half of fiscal year 2025, total income was about 33,075 crores, while profit before tax came in at 2,002 crores, compared to 1,957 crores in the same period last year. So, even as expenses rise, demand continues to post stable operating profits, something very few retailers can achieve at this scale. Cash flow from operations during the first half stood at 1,398 crores, compared to 1,035 crores last year. Even after spending on new store openings and expansion, the company generated strong positive cash flows, proof of how efficiently it manages working capital and inventory. So, the takeaway here is DMart has once again delivered a steady quarter. Revenue up 15%, profit up 4%, margins stable, and balance sheet rock solid. The company is managing inflation, competition, and expansion all without compromising financial discipline. This is what makes DMart special: slow, steady, and consistent growth backed by operational excellence. For long-term investors, the company continues to stand as one of India's most reliable retail stores.